Last week was packed. We saw the pound struggle through the week. We saw the yen finally flex some real strength. And of course, the gold shoots to another record high. Now, these moves weren't just random, right? They came straight out of the fundamentals and sentiments that played out. And as a follow-up to my last video, I've mapped out new structures across the gbpusd, usdjpy, and the xauusd. And today I'm going to be walking you through what those structures are telling me and how I'm personally planning for the week ahead. Now, before I move any further, please note that this is not a signal service. It's just my personal map telling you what I am planning to do. So with that said here, let's dive right into the business. To start with, let's go for the GBP USD. Now, looking back at last week, remember this was the trading setup we were looking at. We had a descending channel and we were looking forward to see if price will break out of that descending channel or probably respect it to continue the downtrend. And of course, we saw price break out the structure, continue to the upside. And one interesting thing here is that as soon as price got into that area around the 1.3500 level, we saw price struggling, buyers struggle to continue the momentum, sellers keep defending that area, as you can see here, showing up at every retest of that particular structure. Now, fundamentally, the UK data was mixed actually. I think I have some figures here. Manufacturing PMI fell to 46.2, its weakest in 5 months, while GDP slowed to 0.3% in quarter 2, and that's from 0.7% in the previous quarter, showing that growth is still positive in the UK but losing steam. Now, that backdrop made Bank of England officials cautious, stressing downside risk and warning that keeping rates too high could hurt the UK economy. And this, of course, took some of the hawkish shine of the pound sterling. Now, on the other side of the pond, we had softer ISM manufacturing PMI from the US weighing on the dollar, giving the pounds a lift early in the week. Now, still with growth concerns capping rallies around that 1.3500 area, it appears the pound sterling ended up the week stuck in a range-bound structure as traders balanced Fed versus Bank of England outlooks. So, what does this structure really tells me? Well, the breakout told me buyers have stepped up to challenge the downtrend, but the repeated failure at the 1.35 shows that sellers are still in this fight. So sentiment is mixed right now. Bullish attempt, but sellers defending very hard. Now, going into next week, I have a new structure to help me navigate this market, right? What I did here was to take into account the character of price action since early of September. And of course, you can see price is within a descending channel. We have the resistance line of the descending channel right here. And we do have the support line of the descending channel exactly here. Now, one interesting thing about the structure is how price action closed exactly at where the resistance line of the descending channel is. Now, to help me position myself adequately for the next move, I have my key level for next week at the 1.34800 area, and look at how beautifully that level lines up with that resistant line of the descending channel. Now, for me, this structure is telling a story. Sellers still have the upper hand unless price breaks out cleanly from this structure, from this channel we have here. So for me, the key is very simple. If we close above the 1.34800, let's say the 1.35, and see some follow through, I will be adding small buy positions and then build if the structure confirms. But if we fail again at the zone and sellers continue to persist below the structure, then I may take tactical sell positions with tight stop loss just to ride the rejection and drop maybe to as far as the support line of that descending channel. And of course, if price can break down the 1.345, this will make me step aside from the bullish buyers completely. So looking ahead, on Monday we are going to be hearing the Bank of England's governor's speech. Anytime the central bank speaks, the market listens for hints on whether they will tighten or stay cautious. So if Bailey sounds hawkish, we might see a little pound strength. But if it leans dovish, sellers may press the channel even harder and push further to the downside. And with US events also lined up later in the week, I'm keeping my buyers cautious. So for me, the descending channel remains the guide until buyers show real strength outside of it. So it's also important to know that levels around the 1.35 can really get crowded. So I will be keeping positions light until the structure prove itself. So while the pound was stuck inside this descending channel, the yen was telling a different story entirely. So last week, the yen showed real strength, right? Dragging the USD lower for 3 straight days as traders reacted to risk sentiment and fresh speculations around the Bank of Japan policy. Now, remember last week in my video, we highlighted the 149.150 as our key level, isn't it? And of course, look at what happened last week. Price did breakdown of that structure and triggered my bearish bias. Even though the Tankan survey from the Japanese economic docket and the unemployment numbers pointed to a soft economy, safe haven demand, and of course the Bank of Japan's governor's cautious tone and political uncertainty from the LDP election gave the yen extra backing. And by midweek, we began to notice the dollar rebound, right? This was midweek. This was on Wednesday's trading session. The dollar gained some ground as Fed officials kept a hawkish tone. Buyers stepped in around this area at the 147-ish to stop the slide. You can see consistent bounce from this particular area, as you can see here, and in fact it led to some higher lows here. Now, at this juncture, price action tells me something clear. Seller had the power to flip the 149.150 right here, dropping it down, but buyers showed up around this area to defend price action. So right now, it feels like a tug of war. We have a short-term bearish momentum with sellers, but buyers refusing to give up the deeper ground, isn't it? As you can see. Now, the real question is this just a pause before buyers take back control, or are sellers ready to push for a bigger move to the downside? Now, to help me answer this question, I have a new structure on the 4 hours time frame here. And despite that strong sell-off we saw last week, I was able to identify an ascending trend line that started way back in April of this year. So this is what I'm looking at. So this April, look at what has been going on in the last, how many months is that? May, June, July, August, September. That's like 6 months of historical data. And look at what happened after connecting the series of higher lows. We have a beautiful ascending trend line to work with, right? And you know how we use our trend lines. As long as price remains above the trend line, we continue to maintain a bullish bias. Unless the trend line is broken, then we start considering selling ideas, right? And for the fact that price still stays above that level, it tells me that buyers haven't completely lost the grip despite the strong bearish move we saw last week. Look at how beautifully, as soon as price got there, we begin to see buy pressure resume from this particular area. Now, this coming week is going to be heavy for this pair. On Wednesday, the Bank of Japan governor is going to be speaking, and any hint about policy or concerns over yen weakness could give the yen some fresh momentum. Now, on the same day, we also get the FOMC minute, followed by the Fed chairman's speech on Thursday. Both could swing sentiment back towards the US dollar, especially considering the fact that price still remains above the ascending trend line. So, right now, this pair feels caught between two central bank narratives. For me, the line in the sand is the trend line here. A hold above it and buyers are still in control. A break below the trend line or below the 146.800, that will give me the first real sign that sellers are ready to flip the story. So this is what I'm going to be using to navigate this market going into next week. My key levels are the 147.5. I will be maybe having my TP somewhere here if buyers take over the market, and then looking to sell only if the trend line and that level at the 146.8 is broken to the downside. Now, as the yen was gaining ground early last week, gold was also feeding off that same um, safe haven sentiment, but gold took it even further. It was an interesting week for gold as we saw price of gold hit another record high at the 3,897 level. Now, the structure you're seeing on my screen was what we were looking at the beginning of last week. At the beginning of last week, we had weaker US data. I'm talking about the PMI, job openings, the ADP report, and of course, yes, the government shutdown talk, which made investors nervous about the dollar. And if we had in safe haven flow from global risk, gold just went on to climb. And looking at the structure we marked out here, it broke out the 3,790.8. Remember, I told us I will be looking to buy from this particular level, and this break here showed that buyers had control and momentum carried it to new highs. But now we are in a situation where price is consolidating after hitting that record high. So we saw price cutting here, consolidation began all the way into the end of last week. And this means that the market is deciding if buyers still want more or if sellers are pushing back. Now, for me, this consolidation is more like a sentiment test. And it's also peculiar with uncharted territory. When price gets to uncharted territory, we usually see things like this. Now, to help me navigate this area, I am looking to mark out new structures for the incoming week. So in that regard, I was able to spot an ascending channel after marking out structures since early of September. As you can see, this is September 1st, and price had consistently respected it. Look at it, higher highs, higher lows, higher highs, higher lows, and right now we have a situation like this. Okay, so now price within an ascending channel, what does that tell us? It tells us that it's a strong bullish trend, and right now price is trapped in a tight range at the top of this ascending channel, and the range I'm talking about here is between the record high at the 3,897 and the 3,795. This level was broken on Monday at the beginning of last week, as you can see, and then retested it, and price remained within that whole area. Now, that for me is indecision at its finest. Buyers holding firm, but sellers refusing to let it break higher. So whether we break above or rotate lower will depend a lot on the Fed in the coming week, with the FOMC minute on Wednesday, the Fed chairman's speech on Thursday, and of course, we also have the consumer sentiment index on Friday, right? So for me, I will be watching how price reacts around this range. As long as gold stays inside this ascending channel, buyers still have the advantage. But if we break below it, maybe at some point we see price break down the ascending trend line and the 3,795, I will hold back on buy positions and possibly switch buyers towards sellers, maybe targeting the 3,700, or even going to lower areas if possible. But if buyers manage to defend and push against the structure and breaking out of the previous high, sorry, this resistance line, we could be seeing price go to as far as the 4,000, because that's the big psychological level in sight at this particular point in time. So, but I will wait to see if it clears that range or pulls back down before making my move at the beginning of next week. And it's important for us to note that at this juncture, especially at record high areas, I usually like to size smaller and trail tighter, because volatility can be brutal when the market is exploring new territory. So that's how I'm mapping the week. The JPUSD is still inside its descending channel, right? While the USDJPY is testing that big trend line. We are waiting to see how market reacts to that one. And of course, on gold, price is hovering around its record high area. And for me, it's never about predicting the future. It's about letting the structures show me who is in control. Is it the buyers, sellers, or neither of them? And then aligning myself with that picture as the new week unfolds. Of course, I will also be updating my ideas in the comment section as I continue monitoring price action. So keep an eye there if you want to follow my thought process in real time. If you have found this walkthrough helpful, hit the like button, share it with another trader, and let me know your own take in the comments. Thanks for spending this time with me. And until next time, trade smart, trade consciously.